Hey, this is Eli, aka Devoted Day Trader, and this video I am going to do a review of all the trades that I placed between Wednesday the 18th, October 18th, to today, Friday the 20th. I didn't have the best week, as you can see on the screen, for the entire week from the 16th to the 20th. I'm down about 650 bucks, about 47 points. In this video, I'm going to go through all of my trades for the week. Well, from Wednesday to Friday, I already went over my trades from Monday to Tuesday. You can check that out on my YouTube channel. It's the video right before this one. So on Wednesday, so this is Wednesday. Let me go to the executions for Wednesday, the 18th to the 18th. Generate, and then let me change this to the 18th. So these are my executions, and this is my summary. And this is the platform is NinjaTrader, and this is a 5-minute chart of this is NQ, Nasdaq futures, and on the bottom I have ES, S&P 500 futures. On the left I have the daily chart for ES on the bottom and the daily chart for NQ, Nasdaq futures on top. Okay, so on Wednesday the 18th, on this day I netted $199, so about a little shy below 10 points. Not my greatest day. In fact, this week is probably my worst performance in over 2 to 3 months. But it is what it is. That's the case with trading. We can't have a stellar week after a week. Well, maybe some can, but I can't. I have to be very honest. I've been at this now for 6 years, and losing days and break-even days and even break-even weeks or small losing weeks, they happen, which is the case for me this week. So on Wednesday we had a let me go to Wednesday on this. I believe this is Wednesday, right? The 18th. Yep, and let me also go to the 18th on this. Go. Yep, so that's the 18th. Cool. So on Wednesday, what I saw was a gap down on both ES and NQ, but I didn't get long according to my notes. I keep track of what I'm thinking during the trade, and in the open on this day, I didn't take a trade because no daily level had been tested. I was waiting for the low of this candle. So this is the 17th. This is Tuesday's candle. This is Wednesday. So I was waiting for Tuesday's candle for the low to get taken out before going long, and that was not happening. It did eventually take out the low later that day, but in the open, per my notes, I didn't see a daily level being tested, so I didn't take any trade. I went long on my first trade on Wednesday, which is on NQ. I went long above bar 18th because I saw some type of wedge. A wedge is 3 pushes down, 1, 2, 3, and this can also be a, let me make the chart bigger. This can also be a nested wedge, which is a wedge within a wedge. So this is the first push down, 1, 2, 3, and then we could have this could be the first push down, the second push down, the third push down, and it was also a second entry buy, meaning that when 16 traded above 15th, that was the first buy, and then when 19 traded above 18, that was the second buy. So that's why I went long, but I got out for break even because I didn't like that 20 closed a strong bear bar. I was expecting it to just shoot up. And one more reason, the other reason why I went long was also the fact that we had a wedge, three pushes down, form around bar 18. Usually, a lot of reversals happen around bar 18. So that was another reason why I went long. And the goal was to take profit at this line. This is the open of the week on regular trading hours for NQ. But I pretty much got a break even on this trade. And then on and then I went back long here. I went long here because we have a big wedge bottom. This is the first push down, the second push down, the third push down. So 4, 18, 43. So this is a large wedge within even from 33 to 41. We have a smaller push down or a wedge. So if this is the first push, the second push, the third push. So, or we could say 29, 38, and 41 were the three pushes down. And this is after market took out the low of the previous day. And usually around bar 40, we have a midday reversal. And I went long here because on NQ after this bar 43, NQ 5 minute candle of 44 was bare body, but on ES I was watching ES at the same time. We go to bar 44 on this day on ES. It was a 44 has a bull body, which means the breakout of 43 was confirmed. So I went long on NQ, and the plan was to take profit here. It missed my profit target by a couple of points. It missed my profit target, and then I my stop originally was below the low of this candle, but or I usually require consecutive closes before below the low of the day for me to give up on the trade, and I held through all this pullback, and I added to my position here. What was the reason for the add? I added to my position here because it tested this red line, which is the regular trading hours yesterday's low, and we kept making wedges. So 1, 2, 3, and then so this was another push down, and I added to my position. But in hindsight, I don't think I should have added to my position here because we do have consecutive closes below this swing low. Uh, so this 64 has a bare body. So does excuse me. 64 has a bare body. So does 65. So I don't think I should have added to my position here, but I added here and here. This light brown box is the new week opening gap from October 6th. So this usually acts as support and resistance. So this is pretty much the gap that was formed between Friday's close and Sunday's 6 p.m. open, because that is when index futures, they open on Sunday at 6 p.m. Eastern time, and they close at 6 p.m. Friday Eastern time. So that's why I added here, and then I added one more time here. So this was the third add, and I got out. I took out yeah, I closed out the contracts here, and I pretty much got out at pretty much the high of this rally. So not the best trading on this day. Not happy with the way I traded. I The right thing to do should have been, I don't think I should have made this ad, and I should have maybe gotten out for a break even, but it is what it is. So on this day, the 18th, I made pretty much $200, and then yesterday was a rough day for me. So yesterday was Thursday, the 19th, and on this day, let me go to the executions. The 19th. So these are all the executions I made on this day. I lost $6,500, $6,595.90. I lost 330 points. This is probably my worst day, my worst performance in about 3 to 4 months. Okay, so let's review the trades on this day. So what happened on this day? So this was yesterday, the 19th. Let me go to the 19th on ES. Let me go to my notes. So on this day, let me do this. On the 19th, I went long here because I was expecting for the market to rally. Yesterday was Thursday. Let me do that. So yesterday was Thursday, and usually, so this is the daily chart of NQ, and we're looking at. Let me go back one more candle. So we're looking at this candle, the 19th. So usually when it's been a bearish week, usually there's a 70% chance that we see the low of the week on Thursday during New York session. And so there's about a 70% probability. So I was expecting for the, considering that it was a bearish week, market has been going down all week except for the 16th. It's been going down. So on Thursday, I was expecting the market to rally higher. And so I was only looking for longs. And I went long because when I went long here on bar 7, the low of 2 had taken out the stops below the previous day's low. So on the daily level, a previous day's low was already taken out, and I went long here. And then on ES, I saw, this is on the same day, on ES, I saw 3 pushes down, 1, 2, 3. So pretty much 2, 3, 4. Those are 3 pushes down. I'm always looking for 3 pushes down. And then we have a consecutive bull bars. And then I actually went long when I saw this candle, when I saw 7 trade above 6. That didn't happen on NQ, but I liked that it happened on ES, and I went long on NQ. It did pop. It went in my direction. It went in my. The plan was to take profit above the high of the day, bar 1, which also coincided with this gray, or with this light brown box, which is the new week opening gap from this week, from this past Sunday. So this gap is between the close of this past Friday, so the 13th, and the open on the 15th. That's where this gap is from, and this gap usually acts as significant support and resistance, which was the case. It was on this day, it was resistance here, 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 here. So that's 1, 2, 3, 4, 5 times. So when I went long here, the plan was to take profit here, but it didn't quite reach my target, and then it came back down. I didn't stop out here because I wanted to see consecutive closes before stopping out, but I closed out the trade here because I didn't like these consecutive. Well, I didn't like that. So 16 traded below 15, that is a low one, and then when 17 traded below 16, that is a low two at the 20 exponential moving average, which means that in a bear trend is a strong entry for lower prices. So I just got out for a loss, and after that I kept watching it. I didn't get involved here, and then I went long here because I saw this as a wedge. One push down, two push down, three push down, four push down, and so on a higher time frame, this would be a clear three pushes down, and this was around bar 40, where usually the market tends to reverse or have a significant move around bar 40. So when I saw 39.40, I bought one tick above 40. And now, considering that, and this is also when the Fed chair spoke. Considering that all the stops, the people that went short here or here with a stop here, they were stopped out. The people that went long here or a long anywhere here with a stop below 22 or 23, they were stopped out here. So I didn't think that the market would revisit this price, and I was still bullish on the week, bullish on the day. So I went long, and it tested that same new week opening gap, and my plan was to take profit when it took out this high, and that didn't happen. It tested this new week opening gap, and then it sold off, and I this is where I made a mistake. So my rule is that once I see consecutive closes below a swing low, I have to get out of the trade. In this case, I didn't. I don't know what got over me, but I actually added to my position here. I added to my position here, and but I should have stopped out. I mean, if not here, I mean, I should have gotten out for break even. If not, I should have stopped out once I saw two consecutive closes below bar 38, because 62 and 63, they both have a bare body, and so that should have told me that or let's see, I don't think 62 closed below 38, but 63 and 64 definitely closed below 38. So I should have, instead of adding here, I should have stopped out, but I added to my position here. I added some more, one more. So now I had a total of 4 contracts. And then what's a kicker is it popped, and this is the 20 exponential moving average. I had a chance to get out for break even. If not break even, I think I was down maybe 10 points, or just something very small, and I didn't take the break even, and I got out for a full stop right here, and this actually hurted. This was demoralizing. In fact, I thought about not trading today. Today's Friday. I thought about not trading today because I took a big hit yesterday, and then today I actually redeemed myself. So we'll go to today's trades. So today I made $4,430 206 points. Let me go to the executions here. 20th. Okay, so today I believe I placed trades both on ES and on NQ. So let me do ES first since that was the first trade that I placed. So I was looking for a long today. I don't know why I was long biased today. So I was looking for a long. So I missed this entire move down. Um, so this is today's candle. So once I saw that during overnight that we took out yesterday's slope, I was looking for some type of reversal. I was off today. I was completely off today. Or am I thinking in the open? So I missed this entire move down. Actually, this is NQ. Let me go to ES. So on ES, I missed this entire move down. The best place to have gone short was one tick below 6 because we have consecutive bull bars where one of them is big and closing on a slow. 6 is closing on a slow. So I should have been looking to get short here. Well, actually no, because I require some type of daily level to be tested before I place a trade, and on 6 no daily level had been tested. Well, I guess it did. Yeah, I wanted a significant daily level to be tested first, and that did not occur. So I didn't get involved here, and because I missed this entire move down, I did. Actually, let me go to ES because I missed this entire move down. I went short here because this is the 5-minute 20 exponential moving average, and this sell-off told me that the market was likely to visit the low, this low right here. This is on ES, this low, potentially this low, and then on NQ, this low, potentially this low. And I went short. Why do I keep going to NQ? Let me go to ES. I went short here because this is a big bull bar, and I had Al Brooks in my mind actually, because he usually says in a strong bear trend, when you see a big bull bar at the 20 exponential moving average, it's usually a trap. It's a bull trap, and yes, this trade did pan out, so I went short here and I got out for profit here, but I shouldn't have taken this trade. Yes, it was a winning trade, but I had no business. Yeah, I shouldn't have taken this trade. And then on NQ, I waited for a confirmation before so I was trading both ES and NQ at the same time. On NQ, I waited until we had a confirmation that it was going to go down. So, and we also have some kind of 3 pushes up. So if 26 is the first push, 28 the second push, and 30 the third push. So that's a wedge at the 20 exponential moving average. So I went short, and I told myself I'm gonna stop out if I see strong consecutive closes above 30. And when 40 happened, so when 38 traded above 30, and it failed to close above 30, I was still bearish, especially considering that we have the daily level here that that which I thought was good probability that the market would try to reach today. So I added to my position here, and then it kept going against me, but there was no consecutive closes above my entry. And when I saw this big bull candle, I saw this 46. I saw this as a climax, and it happened at this light brown box, which is a new week opening gap from October 6th. This usually acts as support and resistance. So in this case, it was acting as resistance. And then when I saw three bear bars with bare bodies, one, two, three, I went. I added to my position here. So now I have three contracts, and yeah, I guess if it had went higher, I was going to take the hit. This was going to be another big losing day, but luckily it worked out in my favor. It started to sell off, and I took profit here, right on the test of the swing low below 33, and then I took the rest of the contracts off here because I didn't like that it was making a wedge. So if one, two, three, yeah, I just didn't want the market to reverse on me. My original target was to take the rest off at, well, take one off. After this one, take one off at the test of the low of the day, and then save one more for um, for the market to get to collapse down, which it did. So this is the extended trading hours, and after I got out, it did collapse down. So I could have made another. What is it? Another 30 points or so. But I closed out the trade. Yes, and so today I made 4,430. I'm still red for the week. So I guess for the entire week. Yeah, so I'm still down 47 points, $650 for the week. I guess the takeaway from today's video is that hey, I don't even know what the takeaway is. In fact, I didn't even feel like making this video because who likes to talk about a losing week, right, or a losing trades? But I pride myself in being transparent, and this is what a professional trader goes through. And in addition to that, I told myself that I would make 2 videos per week. I would do a review of my trades from Monday. On Tuesday, I would do a review of my trades from Monday to Tuesday. And then on Friday, I would do a review of my trades from Wednesday to Friday. And I had to stick to that plan because as traders, we have to be disciplined. Not only as traders, I think as human beings, we should be disciplined and do what we say we're going to do, but only if it was easy to do that in trading. Well, this wraps it up. I will see you guys on the next video. Peace.